Welcome in, everybody. So, we're going to do just a little bit of another impromptu stream. I like kind of just breaking down my daily process when it comes to looking at Asia and ultimately just giving some insight on what are the first steps you need to be taking when you hop on the charts. Now, we make it really simple around here. My main focus is always going to be just getting my platform ready for the day. So, number one, I like to clear levels, get all of that organized so that I have a good blank slate to work from. After that, I will go ahead and consider locking out my risk settings if I need to adjust anything. So typically it'll be about $1,000 of a daily loss limit. I will have a limit of trades, five, six, something like that. Typically it's five. I could have adjusted that, but I just didn't do that. However, we do that on whatever platforms we might be trading on. So as you saw, we did that on our Top Step Express account, and then we will also take care of that on our Top One Futures account. Right here, as you can see, boom, lock out the risk settings for the day. Keep it really simple. Go ahead and open up our trading. And we want to go ahead and start to look at some levels. So we'll go ahead and clear off some of the notation that we have on here. Basically, what we're at on the daily chart is just a continuation of this predominant trend, right? We had this consolidation here. We're breaking out. These closes aren't terribly strong, but they are still closing above the prior day high. So that is always important to kind of keep in mind. So a couple minutes till the market opens. We'll go over any questions anyone has. How you doing, my man? Welcome in. Welcome in. What we saw overnight was a bit of a sell-off. I did a little bit of a recap on this, and then we saw this big move. I didn't take any trades in this. I was done for the day before the open happened. So what we have now is a bit of context, right? We do have these equal highs up here. We do have the strong low, and we have this daily fair value gap. So these are the few areas of interest that I'm going to have in mind. So I think we'll primarily be looking at our XFA for right now. We'll probably start trading on the Top Step account. However, we do have our Top One Futures account that we've been trading on stream as well. So I think, yeah, we'll go ahead and annotate on our Top Step account. See right here. Yeah, equal highs. That's really what we have to the upside. To the downside, I have really this daily fair value gap. I really do think we should trade down to there at some point this week, even if we are bullish. I think that's a natural retracement. I do like that level, but we are about to open right now, so I am going to take a glance at that. We don't want to rush into any trades, but we always want to watch that opening candle. We got about 20 seconds till that happens, and we'll go from there. But just some housekeeping stuff. We've been trading pretty casually when it comes to these Asia streams. We're not doing too much, nothing too crazy. My goal is just to show you that there are opportunities outside of the New York session, as well as show you some of my good habits. So if you have questions, drop them in the chat. I know a lot of people come in and out, and we'll just kind of get to it. I'm a Top Step account as well. I'm a Top Step and Top One. So it just really depends what I want to trade, right? So with this one, I like to go a little bit heavier. And then with my Top Step account, I can go for bigger moves because there is no consistency rule with that. So it just really depends on the type of trade I'm looking for. I tend to use the Top One accounts for more basics. If you guys are not familiar with Top One's instant funded accounts, you can get literally funded. There are some upsides to it where you don't have to waste time with, an eval, but there's also downsides. There's a consistency rule. So that's something to always consider. I always recommend have a few accounts, trade cash, trade prop, just spread it out for how you want to do it. So a bit of a gap down, it kind of just got bought up immediately. It's no surprise. Something this small, I mean, we're talking less than 10 points. I really can't do anything with that gap itself in terms of a gap fill, just because, spread, latency, all that stuff. It'll probably slip me to some extent, but my rule of thumb generally is if we open within some sort of consolidation range like this, as you can see on the 1 minute for this new day open, I'm mostly going to be hands off. That's going to be the premise there. So I would recommend anybody who's interested in trading Asia to do something similar, right? Like stay out of the first couple minutes if it's not an abundantly clear setup. We are pretty much in like the second half of the month, obviously, with not too much news on the radar. So if we look, today there was just a little bit of news, right? But looking tomorrow, we have some orange folder, 10 a.m. news. some 10 a.m. news. So we have a lot of 10 a.m. news this week, but nothing too crazy. I mean, it's all mostly, yeah, PMI. That's about it. So with the news schedule as it is, I'm not too concerned with, having some sort of crazy bias just yet. I'm more so aligned with the idea of just trying to continue to trade what's been working. So again, the levels in mind are going to be pretty clear. We have equal highs above us at prior day high, as well as we have that daily fair value gap to the downside. That's pretty much going to be the frame for our context moving forward. And we'll kind of just resolve from there. Equal highs up here. It looks pretty clean on the 15 if you look at it. So either of these could be a good draw on liquidity. We have this. So if this is Monday right here, this would be Friday. So you have Friday's high. And you have prior day high. These would be higher lows right here. As you can see, I was in this trade into the New York Open, trailed out as it started to break above 1 minute break of structure. So now we just kind of give it time to see what we want to do, right? Because we did have this pivot point. We did break below that swing low. We are starting to invert a bullish fair value gap to the left. However, that doesn't necessarily mean it has to go down just yet. There's always nuance to these types of setups because we're in a predominantly strong uptrend. Bearish levels should fail. That's just basic logic for that type of thing. So, but yeah, anyone new here, feel free to drop questions. I'll pretty much answer whatever. It's nothing too crazy when it comes to trading what we do here for the overnight session. I had someone ask about Top One a second ago. I have a discount code. You can use that anytime you want. Just leave it there for you. If you're new to trading, there's different accounts I'd recommend. If you're brand new, I recommend using a paper trading account. Just trade the chart by itself. You don't have to do anything all crazy. But we'll set some goals. Maybe I'll set a banner, talk about our goals for the session. See if this banner gets going. Boom. Yeah, nice and neat. That's our goal for today. Just to look for a good setup. If it presents itself, cool, I'll walk you guys through it. But if it doesn't, we can just chill. I do have some further goals for the stream. I want to get it, I want to make this thing fun. I want to be able to start basically producing a little bit of music on here, figure out the workflow for that. So that way we're not just sitting here bored out of our mind. Thankfully, I do have some sample copyright-free music I can use for now. But yeah, if you guys have questions about anything, my whole goal is to just show you guys a little bit of a different side of trading. Trading's pretty boring. I like being a little bit creative with stuff, so if I can fuse that together, win-win for everybody. Daily chart doesn't really give us much right there, so it's the context we're operating within. Big ol' inversion off the open, solid move. We're rejecting this gap. Thing is, we don't have to be in any sort of rush, even if we do start to see a structure develop. You do have your daily opener here. Try to get a good eye, see what the quality looks like on stream. Looks like everything's pretty on point. All right, I think we're good when it comes to the stream. So we're all good there. Now our job is simple. We just watch price until something happens. We won't go too long today just because, well, I don't think I feel the need to. However, we will look for something because we need to just start keeping an eye on when we might start to see some developments in structure. One thing that's always beneficial to anybody's trading is just the idea of this premium and discount, this 50% of the range. So if we form a swing low and some swing highs, you'll have all these different markers within there, halfway, quarter, all that. Once this point forms, so that pulls back to the quarter, goes back to almost new highs, then down, rejects the quarter towards the midpoint. It helps you understand, are you still like up high or down low? Like that's as simple as it is. You will be surprised by the amount of times that a market rebalances to the halfway point of a range, like a perfect pullback, 50%, and then goes. It doesn't need to give you that whole deep fib retracement all the time. Those are nice. I love taking those trades. You just don't need to. But like, you know, for example, if you look at this range, even from here to here, I guarantee you'll notice something pretty close to that 50%. Yeah, so when you have, again, we'll just make this just the 50 so we can all see what we're talking about right here. Make this nice and bold. Boom. That's your 50% of this swing high to that swing low. You pulled back to 50% right before the open. And then once again, we're potentially in a scenario where we could pull into the 50%. Make this giant, make this red. And yeah, you can see that from this 50, we created a new leg higher. Now are we going to rebalance to the 50%? We're talking 46 to 24. It's not really a massive range for me. But yeah, that'll be essentially my next kind of level of interest in mind. Make this 2. Also a good idea when you're trading during Asia or low liquidity sessions in general to evaluate tick charts. Evaluate if they look closer to the minute chart, you know, you start to see a decent amount of flow. If this starts outpacing, then that also gives you indication. So we do have this opening range right here that's kind of forming. Question is, what are we going to do with that? So you got like basically this. I make this black. Anyways, that's your opening range that's starting to form. Even in this scenario, we have opening range high, opening range low. It pulls back to the 50%. Try to get this cleaner. So I do like this little bit of a fair value gap you're getting right here, right? You're getting this little bit of a fair value gap. Could potentially look for it to continue lower, you know, using this kind of area. But again, you know, it's the first couple of minutes. We're only, I guess, 10 minutes into this, 15 into the stream. So I would like to see a break out of the consolidation. I think a good rule of thumb for almost anybody is mid-consolidation trades will tend to be losers. Almost always, especially if you're trading for the break of the range. You know, obviously you can do pretty well just trading for the retest of an extreme high or low, but the break will typically get you. go ahead and look at the 15-second chart. Notice this. So one thing I want to point out to you guys, when I bring up a 15-second chart, it's not because I care about what these candles say. It's because they tell a story. I don't care what it's like. Oh, is this a strong candle, a weak candle? I'm looking at series of highs and lows. This is just breaking a minute candle into 4. So I'm able to see the rotations. It's the same level of fractal detail that you get by switching from, a 5-minute to a 1-minute. I'm liking this though. I do think we will break to the downside and maybe we will revisit Friday's high at 320. Maybe we try that. Maybe we try to break for the 50% or Friday's high. Sorry, Thursday's high, I believe. Yeah, Friday's high. Double check that. Make sure I'm not mistyping. Yeah. Even like a move like this, 328 would be nice. So you have this swing low right here. So anywhere between these 3 targets would be an acceptable top end kind of goal. So you can rotate either here, here, here. You can scale out. If you were to take a trade like this, that's the type of thing I'm thinking about. This can easily, form the bull flag and then push higher. That's perfectly fine. So that's why we're risking $200. Not a big deal. So again, watch 100 tick chart. So I'll pull up the 100 tick chart and I will leave the 30-second. So that's like the top end goal. It's 320-ish. I don't know if we'll get it. I'm perfectly fine taking this trade off even at the session low if it shows that it needs to come off, but we're just going to give it a shot. We're going to try something out for the sake of it on stream. And yeah, it's the whole point of this type of trading. It's supposed to be pretty low stress. You see the opening move kind of rejects into a level that we had in mind above head. And yeah, we just want to see this kind of stair step lower. Ideally, more candles need to be printing here. I want to see this kind of speed up on the tape. Oh, nice. You're in the short too. Yeah, I'm liking this move so far. I think it's been pretty clean. This is the opening price, the daily open, so I'd be mindful of a rejection here. This can easily snap back. However, this first candle that we're starting to see push lower, it is a good indication. And my question is, where is my countdown? Need my countdown. Always want my countdown. Always playing the clock. Keep doing that. I don't like wicking at the low like that, but I do want to see this just kind of roll over. Little gap right here, not my favorite. Yeah, super clear action on the tick compared to the minute. It's very clean here. Yeah, pretty much as we called it, kind of rejecting off of the daily open so far, which is the first line of defense for bulls. Not even necessarily that. It's just it's a reference point that many things will associate with. High frequency trading algorithms, black boxes, funds. It's just it's like it's a knee jerk reaction. It's almost automatic. You'll get a bounce here. You have to understand, guys, the thing with price is the test of like a daily open or the prior close. Those things will almost be automatic. They're almost reflexive. The way that the trees, sway in the wind, right? This stuff happens naturally. Just by the nature of how price moves, a test of a prior daily high, a prior daily low, it almost just needs to just kind of touch it and then go back. There's nothing mischievous about it. It's just the way that these things operate. Markets are mostly electronic. Like, there's not really people behind it. It's just programs. Same way your computer browser will work. Trading markets are not really different. They do stuff automatically. It's not always inherent supply and demand. So at least these are looking very similar. I don't like if the tick chart starts to slow down much behind the 1 minute chart. I want to see them pretty much in tandem. Let's see this make a new low. I will validate that as a break of structure. If not, you might be getting that 1, 2, 3 break higher, then run for highs where the stop would get hit. Let's see if we can find out in the 15-second if we can see what I'm starting to see, or envision rather. So yeah, look at this. You see this. Question is this going to hold for the break higher? Something like this hammer is kind of indicating maybe. It rejected at an area where it makes sense, but we rock with the original idea. I don't need to flip-flop back and forth. I'm okay with just taking the loss if it's wrong. The thing with markets is even if you're wrong, it doesn't necessarily, if you believe you're going to be wrong, it doesn't necessarily benefit you to change your opinion. Because at best, let's say at best, I'm 60% confident, so that there's maybe a 40% chance it fails or something. Maybe that's kind of the odds I came into it with. If I try to flip-flop, I'm assuming that I'm immediately correct on my assessment of the trade not working. That could be inaccurate as well. It could be a momentary just kind of retracement for then it to follow through. Probabilities only play out if you don't get in the way. If I get in here short and I say never mind and get long real quick, never mind, get short real quick, the only thing I've done is demonstrate my lack of patience and also get in the way of a probabilistic outcome. This trade might work half the time, might work 60% of the time. But what doesn't work is jumping back and forth thinking I'm right every single change of my mind. Probably not. Now, what reasons would I like to see to get out? It would be, some sort of dominant move higher, maybe a higher low starts forming. If I see it's like really, really pushing aggressively, I might just take it off just to save a couple bucks, but I'm not going to immediately get out and then flip because I could just be wrong again. And here's our 1 minute chart. Notice the structure is not making lower lows. So we had a lower high, lower low. Now we have not made the lower low. This would be a higher low right here. This is where that reversal structure is kind of forming where I'm talking about. Right here, right here. This is now potentially a change in trend. Once we get the break right here, and you see a break above swing points, that would be the higher low, and that's the reversal. Yeah, not loving this candle. I'm not loving this action. But it's all good. Okay, that's a nice little push. Nice little push again, just trading pretty carefree, just looking for things that are likely scenarios. So what did we outline this trade based on? I'll explain it once again. The premise that markets like to return to 50%. So again, we had this move where it returned to 50%. Now we have this next leg up with these equal highs, and we have 50% like right below us. So my thesis is that price will revisit at least make an attempt to go towards that 50% area, perhaps to Friday's high, for us to then potentially see the daily fair value gap in coming days. So it's a probabilistic bet. I'm betting on direction. I'm not trying to skew risk reward too much. I'm perfectly fine with a 1-to-1 if I have to. So that's the trade. We're taking this again on the 150K account with Top One Futures. They're running some deals right now. I believe get like 35% off some accounts. So if you're not familiar, check them out. It's in the description. But we also trade our top step XFA on here, our 150K. So it really just depends on what the type of trade is that we're going for. These instant funded accounts, they have consistency rules. So your upside is capped, but you also do not have to waste any time or repeat failures on evals if you don't want to. Again, different accounts for different purposes. There are some accounts where I'll just trade cash. There's some times where I see a setup where I'll trade options on it. But in this scenario, I'm perfectly fine just taking a semi-linear bet. I mean, technically I can maybe move the stop a little bit, but generally 200, 300, 400, whatever, somewhere in there. See, 5 minute would be nice if it closed a little weak. You have 50 seconds on it. I would like to see maybe a tail right here, topping tail, but it doesn't look like we're going to get it. If you guys like these streams, you know, I know not a lot of people are trading or streaming, at least, or in Asia. So if you actually do like watching, you know, a little bit of laid back trading, leave a like, let me know. Leaving a like tells YouTube that you like what you're seeing, which will bring it to more people who will also like it. It's a little bit of drift higher. The problem with low liquidity markets is if a trade doesn't immediately start to kind of work in your favor or hold, this can just, it could get there really, really quick. Like, yeah, see what we're doing right here? So this is exactly what I'm talking about. Yeah, it's going to get to the stop really quick. So and this is a scenario where I would potentially be thinking about taking it off. I could reduce the loss by about 50% by doing this. But let's see how we close this candle. Do 5 minute candle right here. Yeah, not my favorite close. Yeah, we'll probably take the stop right here. Just let it do its thing. Any sort of weakness that I see from this point on, I'll try to mitigate. Meaning if we form a swing high right here and start to push, I'll just trail this to right there. So let me see a 3 candle pattern and we'll get to the mitigation of this. Here we are. Okay, we're gonna mitigate. I believe we're gonna, yeah, we'll take off 50 bucks off the loss just because I don't like this adverse move. I'm just gonna try to limit my risk because I don't really love that move. I don't want it to start forming that higher low that we talked about. This is that break of structure. So now if we form another higher high, you know, we can just save 50 bucks basically on the loss. But it's cool when you see markets kind of respond to what you're thinking they're going to do and it plays out right in front of your eyes. So it's exactly what I was talking about. I don't like how rapidly it moved because this can happen really quickly. Yeah, I'll probably take the stop right here. It didn't want to confirm that swing point right there. It kind of just bought it up. So we'll see if this is just one little sweep for them to go lower or just take the stop. Either outcome's cool with me. So I have this structure, but to me, it looks like it might want to leg higher. So I'm not going to risk the structure high. One thing you'll notice is easy come, easy go. So I'm never truly in the mindset of just because it pushed, it has to stay. However, it doesn't mean that it has to like immediately reverse. When it does though, it does it quick. It'll just eat through the gap it made. So right here, you're testing the gap. Let's see if we have a 30-second fair value gap. Yeah, it looks like a 30-second. We have a 1-minute gap as well. We'll just stick with the 1 minute right here because we can see the gap on the, out of all those time frames, we can see here. So this is kind of what we're working with now. You can see this bullish displacement with this blue gap right here. This is a reason why I don't want to still be short. So I'm going to go ahead and be happy to trail my stop just a little bit, you know. Watch the tick chart. Yeah, you see you're kind of bull flagging right here. Kind of holding it. It's kind of speeding up on the tick, I believe. But unless we get one invalidation candle, it's probably just going to leg up. Watch this. Through here, I want to be mindful. Especially when we're above our initial bearish array right here. That's like another reason to kind of keep this in mind. So if we do lose on this trade, it will only be $150 with commission and everything, which is less than the 200, whatever it would have been otherwise. So adverse move like this, it's invalidating my thesis. I'm willing to tighten risk. Another thing you could do is leave the same stop and maybe sell partial if you want to minimize a loss. But to me, when I move from here to here, I'm just mitigating because to me, it looks like it wants to go higher. And it looks like my initial thesis is invalid. So much to the point where I'd feel comfortable maybe getting long, but we're just going to just let this work. Let it do its thing. Yeah, because you have these equal highs right here as well. So you see it kind of like flagging to push higher. Yeah, look at this. Right there. To me, it looks bullish. It's just fighting session highs. Like one tick off session highs. Yeah, here's the stop, ideally. Come on, come on. It's fighting it, but I don't think it's going to win. Like, I'm almost certain we went one tick away. A little bit different story on the 100 tick versus the 1 minute. 1 minute's kind of floppy. This shows a lot of bottom wicks. Interesting stuff. To me, this communicates bullishness. I could be wrong though. Hold in all this, so this 100 tick gap. We also have the 1 minute fair value gap as well. So that's what I'm keeping in mind as this did break and make a market structure shift. It could be looking for this leg higher to then, you know, shoot. Or, you know, essentially up here would be the top end. This would be the common target. Our initial bias is short, looking for 50% of the range. But if we don't want to go there right now, then I'm good. It's perfectly fine. Anybody kind of tuning in late, I'll outline the trade logic I was looking at. So initial stop was right here for 10 points. And target's down here for whatever it is, 20 points. As it pushed higher and started to invalidate my trade idea, I went ahead and tightened the stop loss. I moved it right above this most recent swing high. So that's kind of what my reasoning is for that. You have multiple things kind of working out in the bull's favor. You have this structure right here broke above. You have this bearish gap that it's inverting. You have this bullish gap. You have the 1 minute and 100 tick gaps. So I do expect higher highs to be made. And ultimately, we're just positioned to minimize that extra couple points of stop that we were taking otherwise. So see, here we are making that higher high as we were kind of talking about for the last couple of minutes. It's almost there. It's going to do it right now. Shit. There's no way it's not going to do it. So 33 minutes into the session, had one trade idea, and it's just, yeah, there we go. Cool, we got the stop on that. I mean, it does look good for the long, honestly. I don't necessarily want to just jump back in, though. You know what I mean? You have this bullish structure, the gap, the change of the trend. You have equal highs up here. It looks really good for the long. But it's just not my trade right now. I'd rather give it a little bit of time. 5 minute, let's see what we're looking like. Oh, maybe it just got us. That's funny. Yeah, maybe it just got us. Interesting. Still super thin on the volume. See a lot of gaps between the second charts. That tells me that's just volume is pretty low right now, which is not unusual to Asia. So consolidation right here. Are we going to break to the upside? Seems reasonable. The structure does look bullish. We did have that shift rally. Now we're boxing out. Just, I don't want to fall for the trap of Asia where it's like you see this as bullish and then it just deletes it. I'd probably be more inclined to try my short again, but I don't need to jump into it. So yeah, thanks everybody for tuning in so far. If you're enjoying the stream, if you're, learning something new about Asia, leave a like, let me know what you think. If you have questions, drop them in the chat. So again, context of the session, we open inside the consolidation right here. Now we're starting to see a bit of a shift, right? With changing character, boom, consolidating right here. Question is this going to be a fake out? Welcome in. Yeah, thanks. Tuning in all the way from London. Beautiful. Yeah, your session will be coming up in a couple hours, so it's probably not too bad for you to trade this one right here. But yeah, Asia, it has opportunity. It's a lower volume, lower liquidity thing, but that doesn't mean it doesn't move. And it's like you'll occasionally just print candles like that because there's low liquidity, meaning there's not a lot of resistance. It just has to kind of get moving in one direction. So nice. I do like the shorts too. I mean, I might try it again. I don't know. I feel like maybe I moved my stop a little early. So maybe we'll try it again. Again, our idea for the shorts really is back down to this Friday high, 50% of the range. If we get this inversion right here, that'd be really nice. Yeah, I mean, it's working well so far. Entry is way better, so we're able to accommodate for some of the loss we took. There. Oh, what's up? Yeah, London is the best time zone and place for trading. I mean, can't argue with that. I feel like I'm probably in the worst time zone for trading, meaning California. New York session is just super, super early. 6:30 in the morning. But this is nice. This time's nice. It's like literally what, 4 something? Yeah, 3:30. I don't want to take this on my top step too. I don't know. Hmm. Hmm. Interesting. It is inverting this gap. Maybe considering adding to the position. Yeah, we'll do it. Do this one right here. Let's see, 317, 317. Cool. We'll just go 317 across the board. I'm cool with this. But we'll focus on this trade right here, the structure. Stop what, 354? Is this one the same? 355. Okay. All right, cool. So let's get focused on our time frames. I want to be watching this tick chart. I'm gonna go ahead and take off all my colored levels. We kind of know what's going on. Nice. Yeah, I mean, you're doing it the right way. You know, a little bit of size in Asia is good. It's good to do. You have two ways to kind of trade it. You can either catch the pop really quick, the volatility of it, or you can give it a little bit more room and try to get that bit of a wiggle down to where you're trying to go for. A little tricky location. Yep. 8.5 points. That's how you do it. That's how you do it. I think that's some of my favorite trading is just super linear stuff like that. Just bang it out, catch the volume, the volatility of it. But I do like this idea. I do feel like structurally this is a good short idea. Whether or not it just wants to kind of juke me out, like, then so be it. But I don't think this is inherently greedy. I think it's super natural for price to want to just go a little bit lower. I mean, we tap this gap a little bit. Just we have a lot of this open. So even if we dip into here and kind of just stay around this area. So the undertick, boom. Just in that opening range still. So I think our mistake today was we got short in this area and we just trailed the stop a little early because I thought it was going to invalidate. Maybe I should have just left at range high and just still been rocking with the same idea, but yeah. Boom. Flat and $500 enough before you sleep. That's how you do it. Yeah, trading before bed, you got to keep it kind of, can't go too crazy. Be up all night. It's the adrenaline. I mean, the adrenaline, just like you get wired from it. All right, so we're rejecting. So we went up, consolidated near the highs, did not make a new high, came back, rejected it so far once. Now we need to see if we can break this open range low. That's the $1 million question, or actually it's not a, it's the $560 question. But yeah, I mean, $500, you cannot complain about that. What's everyone mostly trade? You guys trading index, trading commodities, Forex, options, crypto, NFTs? What do you trade? Yeah. Yep. I notice, for me, I notice it's like if I'll do like a seltzer or something, just like you just do like a little Truly or something like that. One little drink it helps take your mind off of the idea of being in a trade. So like you wrap up for the night because it's a clear like mental shift. No one's gonna be like, oh, let me just drink a Truly to trade. No, by doing that, you're like, okay, I'm deciding I'm done trading. or jumping in the pool or something like that. I like doing that too. But yeah, still in this opening range, guys. Trading ES or NQ, that's awesome. I started with ES. I think a lot of people start with NQ, which is surprising to me. I spent years trading ES. Before that was SPY options I traded. See what we're looking at like on the 5 minute. Yeah, 5 minutes a little sketchy. Could work, could not. Problem is, it's like, yes, it's a consolidation in a downtrend. We did sweep below here, so we could easily run for the highs, which is kind of what we're seeing right here with this wick. But you know, the question is, do we need to sweep this high to then go lower, or are we just going to kind of drift lower, which is what I thought. To me, this is a really easy or obvious type of trade where it's consolidation and then just maybe a little bit of a dip. That's it. Down to a technical level, not an extreme. Notice I'm not saying we need to go here. All I'm saying is this Friday high right here, that. I just want to touch that. So that's my trade thesis. You also have equilibrium of that rally right there. That 50% and that Friday high. I think we'll just call that the same level. Friday high slash EQ. Make it nice and easy. This is the prior EQ that you rejected off of right there. Give your daily open right here, session low, shift in structure. Trying to clean this up for you guys as much as I can. Lighter gray. I'm going to kind of delete some of those levels as well in the lower time frame. Simple premise. Simple premise. I'm looking for the opening range to break to the downside. I feel like there's a bearish skew on things, given the context within the 5 minute. Yeah, hey man, thanks for stopping by. Appreciate it. I appreciate you stopping by. Thanks for sharing. Have a good one. Take care, man. Good night. So we're seeing rejections at this level that we had marked out. Like, we're seeing it happen. Will that be enough is the question. Daily open. I think we'll leave the daily open just on this chart right here. Why do I care about the daily open? This is going to be where the flip for the daily candlestick happens, which will be the top wick, and anything below will be the bottom wick if it closes bullish. I'd call this the, what is this? This is your afternoon low right here, like prior day afternoon low. And the afternoon, the lunch low rallied, could not make a new high, and now we're starting to see it move lower. So why do I like slower markets sometimes? They're good for understanding that you can get positioned inside of an area with a stop that's like outside of what seems like a reasonable wick, and then you can allow it to kind of just slow trade or drift towards a target. So it's good for just a directional bet, but not necessarily one where you're saying, I know for a fact this is going to happen really, really, really quickly. Because if you keep your stop wide enough, you can just kind of let this wander as much as it wants, and then you wake up to either profit or you wake up to a loss. If you have a good bias, I mean, it's a decent way to structure your trades. Essentially, that's what I did last night. So I'll walk you through a little bit of this. I had a trade essentially. Where was it? Think like right here. Like in this area. And I had to stop like near like 320. So I almost got hit, or 315 or something. Almost got hit. And then the slow traded. Woke up, took this off. the trail stop right there on the 1 minute. Trailed it like right before the New York Open, and it broke the 1 minute highs, and we were out. So that's an example of just letting it kind of work. I need to double check where my stop was exactly, but I'm pretty sure it almost got hit, because I think I only had like $470 of risk, and then I made like 1,000 on the trade or something. $47. So okay, we have at 48. So we're approaching the new hour pretty soon. 12 minutes. Kind of whipping back and forth. Nothing too crazy yet. Nothing too crazy on the charts. The only issue I have with trades like this in this area is just because, yes, it can go lower, doesn't mean that it won't go higher or even substantially higher before then it rolls over. You know, you have these highs right here where it can just sweep the high and maybe shoot up a little, or maybe just stops there and then goes. To me, I see this is an easy continuation. If it doesn't want to give the easy trade today, then well, ultimately it's always out of my power, and there's nothing I can do about that. But structurally, this does make sense. It's sound. It's not like an egregious target. This is more than reasonable that we reach here. I feel like my only concern would be that we might just dig higher for a while, maybe into this hourly gap right here. Yeah. For us to then trade lower tomorrow. So it's just kind of a tricky spot for the stop loss. It's a little vulnerable right there, but there's not much I can do, because if I do want to allow for this to trade into this upper fair value gap and give it the risk to do so, I'm opening myself up to needing to, give it that much. Well, that's essentially, because if it's going to test here, it might test any of this. So I'm almost assuming it's just going to be a bit of a breakaway gap, given the close below here, inside bar, then roll over. I do not love the fact that we are stopping, or we have our stop aligned directly on the hourly gap. A little tricky. Maybe we give it to 56 or something, right? Longer it holds here, the more I think it's finding acceptance, which makes me less likely to want to stand the short. But, these are just how my internal thoughts are. I try to reflect on what I'm thinking in a trade, so that way I'm never like confused or blindsided by an emotion or anything. If I think a trade's going to eventually stop me, I just start telling myself like, this is what's likely to happen. So that way I'm never like, how did I get stopped out? And then you try to revenge trade or whatever. So walk yourself through the process. It's you're desensitizing yourself to adverse outcomes. Like the same way that traders always say, it's okay to take losses. It's okay to take losses. They say that because they're telling themselves that as well. It's like it's an affirmation, if that makes sense. Everyone understands conceptually that taking a loss is normal, but you have to remind yourself. Otherwise, it doesn't hold the same value. It doesn't hold the same weight. So this is stuff I like to share with you guys. So if you like this type of insight onto things, leave a like. Let me know. Let me know what resonates with you. Failure swings to the downside, failure swings to the upside. So what you call pure consolidation. My higher time frame skews it to the downside in terms of a bias for me, but then the lower time frame is just kind of just holding price until something's going to allow it to move. Maybe that's the start of the new hourly candle. I personally think the start of the new hourly candle will allow it to move lower. So that's kind of what I'm holding on for, if you will. We have, let's see, at 652 right now. 652 right now for me. Yeah, 3:52 in Cali, 6:52 in New York, Eastern. Let's get this banner off. Banner, let's see. Psychology is really going to be your most important asset when it comes to trading. I don't really care what people say when they say psychology doesn't matter. It matters a lot for me because I can get worked up over things. That's how I am in life. I just know that. So I have to like learn how to acknowledge things in a proper way so that way I'm not like just lashing out. If you're wired any bit like that, yeah, psychology is going to be what holds you back. The need to be right, the need to, have certainty in the market, knowing what's going to happen. These inherent or intrinsic values that we have as humans, like they're really tough to make money with. This isn't like business. Business, you can really force things in business. I used to run a gym. I owned a gym for a while. You can just kind of brute force it. Can't do that in trading. You can't. You could go out and knock on doors, set up events, do all that stuff. Trading, nope. Be patient. You're better off doing nothing most of the time. The new trader tries to minimize risk at the sake or at the cost of being in the trade, right? So they might say, oh, well, this is taking forever. Like I just kind of did. Honestly, I moved my stop a little preemptive. I didn't necessarily need to. Save $50, but did I really? But I can reflect on times where it's like I'm cranking it tighter. Maybe I have the stop right here. I'm like, all right, now it needs to go immediately. That's a lot of pressure to put on the trade. The trade can kind of just do this thing for a little bit. It doesn't need to do it in the next 3 candles. It can take a couple minutes. It could come close to your stop. It can roll back over. The wider variety that you allow in terms of like how price actually moves, the more likely you are to have a favorable outcome, aka an actual iteration of your probability-based edge. Your edge isn't, oh, this trade works 60% of the time, 70% of the time. When you manage it like you're super greedy, when you're super stingy with it, when you have zero risk and all reward, that's not how the edge is defined. Because if you did backtest it like that, you would see you'd probably lose about 20% across the board in terms of just raw win rate. And I don't want my win rate to include false failed trades. I want it to have invalidations of the trade. So if this breaks above here, yeah, it's probably invalidated. That's a good loss on the system. But if I trade it to where it's like right here, I don't necessarily know if it needs to sweep that one more time. I don't even know if it needs to sweep up here then go. But for me, I'm saying this is enough risk. It's a good enough balance between the amount that I want to bet on this idea as well as a structural invalidation point. So those are the things I like to think about when I'm looking at structuring risk. How does it affect my pocketbook, and how does it affect the overall market structure that I'm viewing? Five-minute does look nice. Obviously we've failed to make higher highs. Same goes for the lower lows though. So I'm cautious of that. All these topping tails are favorable to me. A break below here would be a break in structure to the downside for the 1 minute. But we want that with a heavy close. I don't want to see any wick. And we want to trade towards this equilibrium point. Highly recommend you guys get so you have this little pen. Get this for your trading. Just go download some sort of screen pen. Because if you're just like charting, you're kind of like visually walking yourself through it. I have a magnifying glass on here. I do this when I'm trading, like not when I'm streaming. This is me coloring on it, and it doesn't mess up my drawings. It's outside of TradingView and outside of Project X. So we're seeing weaker closes. We want to see this break. 42s, 342 is kind of level I have in mind for that market structure shift to the downside. 5 minutes starting to look a little more better, more nicer, more betterer, starting to develop in a way that I'm starting to like. So again, downside break under 342 will me start to begin to validate my trade idea. That doesn't mean I tighten risk all crazy. That doesn't mean I rush the trade. It just means I like it. Looks better than it doing the opposite, right? You can build an entire trading philosophy around that one heuristic. When price stops doing things that I like in comparison to things that I don't like, when that ratio flips, that's when you want to get out of the trade. So as this continues to make lower highs, lower lows, break through these, significant levels, those are things that I like, and any pullback, it's tolerable. However, if it starts uptrending after this, it's doing a lot of things I don't like, and then that ratio is flipped. That's a good time to get out of the trade. All right, 1 minute. 1 minute left until we get that new hourly candle. And this is where we'll either see a little bit of volatility. In my experience, the start of every hour candlestick gives you a little bit of a push. For today, I'm going to go ahead and check really quickly. We're going to look at Japanese yen. And it's just a bank holiday, I guess, overall. Yeah, there's nothing overnight for news. But the 8 o'clock, 7 o'clock candle can start to create some volatility. The 8 o'clock definitely will. Let's flip to the hourly real quick. Yeah, I mean, I don't love the hourly candle. It doesn't really do much for me. You can easily just push this and stop me out. So 15 seconds, we'll give it a second to do what it needs to do. This is our current standing in price. Yeah, that's that volatility coming in. It's pushing initially to the upside. It can easily take my stop if it wants to break this opening range right now, but that's okay. We're looking for something in my mind that aligns with the higher time frame right here to test equilibrium. But if it does want to just retrace to right there, then that's perfectly okay. First candle doesn't necessarily indicate move, or initial direction doesn't necessarily indicate what it's going to do. It can also indicate that it's some sort of order block change in state. But once market structure starts breaking up here, then that's really starting to give me a counter signal. So I will be mindful of that. Look at the 5 minute. 5 minute probably looks, it's kind of whatever. Not necessarily the easiest trade. I did think it'd be a little bit smoother, especially with this inversion right here. I thought this would actually push for that low right there, but it did not give us that. So under tick again. Do the 15 second. Well, under tick right here. Yeah, this one's gonna probably run. Looks like it. Yeah, look at that. 100 tick. We'll pull off our colors again. So mind you, until this point, it has not seen any sort of market structure shifts. It's been real tight consolidation, and it's not given us that move to lower. We had an indication that we thought it would, lower highs, these wicks right here. And then now it's seeming that it might just want to start to spring for that stop loss, which is perfectly fine. There are highs there if it needs it, but higher time frame bias tells me lower. Maybe this lower time frame noise is just not the right time just yet to get in. If you guys like seeing these live breakdowns, me walking through my thought process, showing my perspective and showing how I just use different mental models to not really care too much about the outcome. Leave a like. Let me know. I like to think of what I do as just showing you the art of trading. What does that mean? Well, simply put, the skills that you need to have as a trader are not like purely technical, because if they were technical, you wouldn't ever do them wrong. They're they're more guidelines on how to behave in a certain context. A technical skill would be like someone teaching you how to repair a transmission. You're not going to get that wrong. It's a simple process that you're just going to emulate. You're never going to get that mixed up. You're not going to accidentally do it backwards or do it completely wrong. You know how to do it. Trading, on the other hand, that's where it's more of an art, because anybody can make a bad song. It doesn't matter how talented the artist is, they can make a bad song. They know the technical skills to make good music, but it's something that comes from inside. This is creation. It's not fulfillment of an order. This isn't packing. This isn't creating some sort of itemized checklist or spreadsheet. Those things you don't really mess up. They're the same every time. But design, right? Creating a logo for a shirt. You can make a bad logo. You can make a bad song. You can make a bad painting. Even though there's certain technical elements of, understanding just proportions of things, you can get that all backwards. You could have a bad theme, a bad day. You could be tired. Those will all affect your art, and that's ultimately what we're doing. We have we have a tool belt of things we can use, but we're more artists than we are technicians. I'm gonna close as promising. All right, guys, how you liking that so far? So again, all we've really tried to align with this session has been the short. We took one entry here, and as I started to approach the session high, I preemptively trailed it right here and got wicked out for a reduction of the initial stop. But with that comes also another try right here, where I have a better entry price. But I do have a loss on the record, so however you want to look at it. I have a little more info after we consolidated for like 10 minutes right here. I did think that would hold, and now we're starting to just see wiggles in the range. It's nothing concrete yet, especially when you're doing this stuff right here, because then this can just go here, sweep that side. So let's give it some time, guys. Slow markets, they move fast when you don't put a timeline or any sort of restriction on them. I don't need my stop fixed tight. I can just risk the opening range. I can assume that this is going to give me a natural continuation to that equilibrium of the range. Again, these are all just principles, right? Price tends to want to go from low to high to midpoint. So if we have low to highs, midpoint. Also Friday's high. That's the trade logic. You want to build conviction in the trades you take? Talk yourself through them. Write it down, chart it up. In a lot of my earlier trading, I would spend a lot of time just yapping on the chart, right? Pull out some text, be like, it's a bearish, whatever, right? Just type it all out. Bearish SMT, yada, yada, yada. Because it helps reinforce what you're looking for. Need this open to be broken below. Let me double check something. So tomorrow it's just 10 a.m. news, really. That's all it is. 10 a.m. news. July 22nd, 10 a.m. We have Powell at 8:30. I guess that's super significant. But yeah, that could be super significant tomorrow with Powell, because what's he speaking about? What's Powell speaking about? The reason I ask what is Powell speaking about, because, well, I mean, simply put, there's been talk about him being pushed out of the Fed, or, you know, at some point. So yeah, so again, here's that little bit of a sweep below, then now it's starting to run towards the other side. That's why you can never get too hopeful when you start to see a gap like this. Asia is notorious for invalidating lower time frame fair value gap, so I don't even register those in my brain all that much. In New York, you can expect something like this to kind of hold, but in Asia, I wouldn't. I honestly would not. And here's another pro tip: whenever you're in a sideways range, you want to look to fade those ranges, like get in at the highs or maybe a quick continuation, but you don't want to trust so much that a sideways market is all of a sudden going to just start, you know, trending lower highs, lower lows. This thing is going to be way more jagged. It makes more sense for the market to want to sweep higher to then just dump lower than it is to just, you know, value your little entry. Just because you can see it all of a sudden doesn't mean that it's significant. So that's the problem with like trading as a pattern. You trade as a narrative, as a context. It'd be way better just to take an arbitrary entry at a good area. You can enter wherever, right? You enter for whatever reason. Then to have like a really refined entry model in a really rough area. Like it doesn't matter how good your short thesis is on the 1 minute chart right here. It ain't going to work. It's just not going to be it's not going to happen. So if you've experienced something like that, I'm sure you can kind of relate, but sideways markets, I never, ever, ever want to trust those little gaps, especially Asia. Yeah, so it's his final speech before their policy meeting on the 30th and 29th, 30th. So he could potentially be hinting at some stuff. That's going to be a big concern with the market, you know, all that boring stuff. Those fundamentals, they do matter, especially right now. You got to think, if we even... Yeah. There we go. So if we take a minute and actually just look at the daily chart for NQ, and we scroll back a little bit, I hope you guys remember this wasn't that long ago, but you get back to, you know, over here, December, we're just pushing along, right? We're just climbing up to here. And what happens? You have a bit of a slow day right here, inside day, and then you get Powell, boom, just nuking everybody. That type of action happens out of seemingly nowhere. You cannot tell me that this chart right here, that chart right there, does not look like what we're starting to get right here. So large downside moves can happen, especially if the Fed is going to be yapping, doing their thing. So got to be mindful of that. Now, for the context of our trade, I do believe this is a normal overnight move. We're literally talking about less than 30 points. But I don't want to actually sit here forever. We're going to give it a little more time, and then we're going to see what it does. But if it doesn't come to a conclusion within maybe 20 minutes, 30 minutes most, tops, max, we'll wrap it up there. Just let it do what it's going to do. You guys saw the trade logic, the entries, all that stuff. So even if it's not on stream, you have a good idea of what's going to happen, right? I have my stop up here, 56, target down at 317. I'm just going to hit one of them. Yeah, that's the idea. It's going to hit one of them first. 2.7 R, I don't think that's crazy at all. But I'd be okay with a 1-to-1. Would you? 1-to-1 enough? We got this right here. We got our top step one as well. Top one futures, they are running deals still. The sale has been extended. Instant funded accounts. You can always use my code DTA if that's something you're looking to get involved in, and you'll get the best discount at the time. So anytime there's a promo, you can just use my code, and that will save you more than just any other code you'll find, and just like the default codes. So I like having a mix of accounts. I like trading cash accounts. I like trading some intraday trailing drawdown accounts sometimes. So I have a variety of accounts I'll trade. However, for this type of action right here, I'm not going to be using some sort of intraday trailing drawdown account. I want this to just kind of stagnantly move, however long it takes, that's fine. For trailing drawdown accounts, you want volatility. You want that quick expansion, and you capture that upside like you're trading options. So still sideways, guys. Notice how just an acceptance of that fact that we're in a slower market gives us that peace of mind that, it will eventually materialize out of the range. I'm not sweating it. I'm not worried if it breaks on this push or that push, or, I'm giving it the room and the grace that it needs to actually give me some sort of clue on what's happening. To me, this is an easy trade. People are impatient. They say, this is so hard. This is so hard. You could just sit still. You could just sit still and allow market structure to give you some evidence on what's going to happen. I personally believe we're going to kind of roll towards this. Could be wrong. And if I'm wrong, I'm willing to be that wrong. I don't want to be this wrong. I'm okay with this amount of wrong. Up the 100 tick chart again. See what we're looking like. Looks like the tick chart's kind of slowing down, to be real with you. Let's see. Boom. 615. So yeah, it's about the same as the minute chart right now. So you see all the way, I can see 615 here and then 615 here. So somewhat the same speed, but from 7 to 713 is like right there. Yeah, there's a big slow period right here. See, the time's a little bit off. Typically when, transactions start flying through, they're going to be printing more candles on the tick chart because it's based on every 100 ticks. So that's a sign that volatility starts coming in. Volume, and you start to see range expansion. Nice little afternoon action. If you want to use this as a time to try out different approaches or whatever. I practiced Asia using just evals in the beginning. At least that was my intention. I definitely traded funded accounts and stuff, but I tried using this for evals. Sometimes you can size up, get an easy move, but very experimental, right? I'm not necessarily trying to maximize every single account, link them all together and trade this. Just put around. One lot each platform, cool. But yeah, as far as streams go, this is pretty much all I'll trade. I'll trade 2 accounts. Not trying to pull port during Asia. Doesn't make sense for me. Let's see what we're getting at. It's impressive stuff. This is a good indication. So if you're not in this trade, notice what we're doing right here. We're just going sideways. This type of action during Asia is usually very indicative of the fact that, yeah, the Fed, the upcoming, whatever he's going to say, is likely what the market needs. So even if you're not trading this, you could come into the next session with the idea that, like, maybe it's going to slow down a little bit, right? Like, what are we actually doing on the higher time frame? To me, I mean, we don't really have any levels. All I'm trying to do is really just kind of trade it back down to that wick on the daily, along with the 50% of the range. So I'm just like trying to form that daily bottom wick for us to then go higher or whatever. So I think it needs to come here, which is what I'm willing to trade, but I don't expect it to be like a high speed move. It could be just a purely mechanical pullback. It takes a little bit. So that's my thesis. But, either way, we'll be proven right or proven wrong. Another day in the office. The traders who hate this say, anytime it gets near the highs, like, I'm going to be stopped out. Anytime it goes near the lows, I'm going to be rich. Then they'll fight it. Let it do what it's going to do. If it goes up here, all the way up here, I'm probably wrong. At least from the context of this entry, I'm wrong for sure. But if we flip it, look at the hourly does provide a lot more context for you to be right in this trade. So, you can literally trade anywhere into this area and still be right. All right, so I have a little trick. It works almost every single time. Basically, this is what you got to do. Whenever you're in a trade and it's not doing anything, all you got to do is walk away. And then when you come back, something's going to happen. It waits. There's like some sort of pressure sensor. As soon as you get up off the chair, it'll start moving. So I'm going to go ahead and I'm going to let my dogs go out into the backyard. And I will be back and hopefully top one. I mean, top one's sick, dude. I like top one. I like what I like. I like top one. 1 second, puppy. I like top step. I think it's cool. I think take profit's cool. It just really depends on your goal. I like top one for more of just like my linear kind of base hit trades. But yeah, out of everything, I mean, I prefer trading cash. But the one thing I don't do is I don't never have people tell me what I should like. I just like what I like. You know what I mean? Anyways, I'm gonna take my dogs out real quick. Be right back. Looks like it got patched. The trick of walking away did not work this time. But anyways, this is a good example of sometimes how slow markets kind of play out. They don't always have to give you a move. We had some pretty good moves on the last stream we did on Thursday. Those were pretty solid. But right now we're just consolidating a little bit. I'm hoping for the next 30-minute candle to give me some sort of range. And then we go from there. Cool, back to break even. Kind of wicking. Let's see what it looked like on the 5-minute. Yeah, really just holding that value. So what happens in a trade like this? Yeah, we like to look at something like this object tree. Do we have one? Do we have one here? Nope. Okay, we got to make one. Visible range. Ugh. All right. Give you guys some free game. So one thing you want to be looking at essentially when you're inside one of these consolidation ranges, first of all, this thing is ugly. I don't know who designed that, but they should be fired. You're going to want to make this just like look super nice. Otherwise, you're not going to want to use it, but this lighter, this lighter. Something like that. And what you're going to want to do is make this probably 25. What I'm going to try to do is look for little pockets of essentially just void. Do ticks per row. I probably do 4, honestly. And let's just do 1, 2, 1, no, 3. Yeah, we'll do 4. I think that looks pretty nice. Going to control, make this a lot less dark. So basically, if you're ever going to use volume profile, number 1, move it to the left side of the screen, make it look nice. And I want you to observe what we're seeing here. So the reason I have my stop pretty precariously placed above these highs is because like when you see a bigger move like this, it doesn't necessarily, if it's going to sweep the high, it could very well reach higher, like up here. So anything in this area is pretty much fair game, meaning why give it the extra couple pennies if you're at a risk of a wick? So with this type of structure, and yeah, let's see what we look like on the higher time frame as well. This 8. Yeah, this is really one-sided. There's like nothing. You have like nothing in this lower area. Since we have the brackets on this side, maybe we try to move this to the right. See what it look like. So essentially, once we get out of here, I feel like we can easily reach this. You probably have pretty fair traffic down to here. Like this is probably all fair game, but I'm okay with that. Just out of the little turbulence into that area, at least for this account. The point of control is up here. This is a P-shaped profile. A break below that is typically indicative of a bearish development. But, you know, it's just one layer of analysis. You can't build your trade thesis on one thing. You got to look at a couple different variables. Call right here. Boom. So we're consolidating at that point of control. If you guys are not familiar with volume profile, well, honestly, it's worth looking into. It's not the end all be all. I'm not going to pretend like you can be profitable just by using that by itself, because it takes a lot of context. You need to know what you're actually looking at. It's not just a indicator that looks pretty. Definitely looks cool, but that's not what's going to get you paid. It's knowing how to use the tool that gets you paid. And one thing you can always be doing is having just a variety of tools in your object tree. So if you're using Project X, whether you're trading on Top One, whether you're trading on Blue Sky, Top Step, the futures desk, I don't know, there's a handful, right? There's a handful that use Project X. If you're using this platform, get object tree, you kind of tuck things away. You don't need them up all the time. I don't like having things up all the time personally. So we held VWAP pretty consistently. Maybe now we're about to get the break above range highs to then take us out of the trade, but flat VWAP's typically indicative of obviously a neutral session. It's not too much going on. So when we're in a range like this, it's either, yeah, we get the true breakout like we were looking for. Maybe this time it's just in the opposite direction, but yeah. 2 minutes or 1 minute right now until the next 30-minute candle. Let's see what we're looking like. 30-minute, yeah, 30 minutes kind of rough. 30 minutes kind of rough. So now you're starting to see a push above these highs. Can we close above here? If we close above here, then I would say the stop's pretty guaranteed to be coming up soon. The tick chart, still nothing on the tick chart. Tick chart's kind of sloppy. Alrighty, so yeah, look, we're starting to see a reaction at this high. These are the areas where you want to see something start to either confirm the uptrend is now forming, like these wicks might be indicating, or like a strong close back into the range kind of gives me the clue that we will potentially be seeing now the bottom side of the range. You got to remember there's two functions for swing points. It's either to show that we are leaving that defined range or that we're showing the inability to do so. So we swept all of these wicks. We swept the bodies that you can see here. We did not sweep this one wick. It's not necessarily necessary. It's not prudent that we do it. We can get it by just sweeping the bodies, but I'm inclined to think we're going to go on an uptrend right here. Even this though, I think this is all right because you got to think the way if we get stopped here, it's still following the same logic that I was looking for. It's just to the other direction, you know? If I'm looking for these lows to break, I can't be all that upset if this happens and it runs because I wanted that to happen. Just I didn't have the right direction on it. You know, it's still the right framework to take a trade like this. If I had a stop, let's just say 36 or something, I'm targeting 56. Enter here, and then it happens to run that way, that's still a good trade. It's just the wrong bias. So then I could go back and say, you know what, in my journaling, if I am wrong, what am I seeing that's not right? Am I not respecting the idea that we're in this fair value gap right here and that perhaps we're going to hold it? I mean, I think that's a very valid criticism if that is the case. Is my stop in a vulnerable location? Kinda. So in a broader sense, I would make it an easy target if I am looking for the upside. So either way, the framework is good. It's just the bias and location might not be optimal for what I'm looking to do. So if we're operating out of this gap right here, I should maybe be mindful that we could hold. A little bit sandwiched. Yeah, thanks everybody for checking out the stream so far. If you're enjoying seeing these breakdowns, hearing my thought process, leave a like. If you want to see more, leave a like. If you got questions, you know where to drop them. But we still will just keep pushing on for now. Give it a few more minutes, but I don't want to be here too much longer. We've seen nothing, but that's the beauty of this. How do you operate when markets are going slow? Do you pivot a bunch, or do you just commit to one direction? It's easier to do that. It's easier just to pick a side and stick with it. Pick a team, up or down. If you bet on a game, right? If you're betting on a sports game, whatever, football, basketball, you're betting once. They win or lose. You're not betting on them doing a million different things. So we'll probably look to wrap this up in a second. And yeah. So any other questions before we hop off right here? Drop them in the chat. Let me know. But that's pretty much it right now. Oh, thank you. Yeah, thank you. Sorry, I forgot I muted my mic. Yeah, just gonna start to wind down on the stream. If you haven't checked out Top One Futures, feel free to check them out. Link in the description. This trade, I mean, this just went sideways. I was assuming we'd get the downside break. I thought we'd reach for more of like a equilibrium of the range, based on this kind of market structure right here. Swing low, swing high, we'd reach for the lows. But I can see why this might hold as a low. We did test this fair value gap. I thought we'd reject out of this gray one, but it doesn't really seem like we're going to do that. But either way, I'm pretty much done evaluating price at this point. Kind of just going to let it do what it's got to do. And then, yeah, if you guys enjoy this type of thing, I will be streaming a couple times a week, at least for Asia. And then I'm going to get back into doing New York streams. So more than likely you'll catch on some days 2 streams. Like there'll be 2 streams available. So, but when I start this one at 6 p.m. Eastern, just because that's when the new day opens. So yeah, if you guys like seeing this stuff, feel free to leave a like, let me know, and we'll get back to it. But until next time, thank you guys. And this will probably just take the stop into the highs, but either way, my risk is 356. So we'll just let it do its thing. I can see where the trade idea might not have been optimal, but I also see why I like it. So I'm not like, oh no, I regret this trade. I think it was a good trade, whether it wins or loses. Probably didn't need to take the early stop here. Could have just been the same entry, but yeah. Nevertheless, till next time, guys, I'm gonna hop off here and the stream. Thank you so much for tuning in. We'll talk soon.